So yes, it is now started. So I would like to ask you to yes, Michelle. So hello.
Uh,
Yes, Michelle, you were
what
right. So it was presented. Yes, it was in the presenter mode. So I would like to ask you to begin from the beginning.
Oh, okay. Well, I'm happy to do that. Happy to do
All
that.
right. I mean, it was in the presenter mode, so we were all talking all together inside. Hello, all. Now we are beginning the seminar. Sorry about the fault. It's my mistake. Now we are all ready. John and Michelle are here. So Jem already had a kind of early introduction, but not to waste more time, I would like to give the word to you, Michelle. Please, it's your turn.
Sure. I'll start again. My name is Michelle Messina. I'm based in Silicon Valley and work with lots and lots of startups around the world. And today we want 5 tips for going global for startups to help them understand some of the things that they can do to be more effective. A lot of these things go to business and strategy issues, and other things go to knowing and understanding your market really well. So the first slide that you see is know your customers really well. And the challenge that we find is with entrepreneurs, they say things like, well, everyone's my customer. And when everyone's your customer, we think that no one's going to be your customer because you have not necessarily defined your offering for a very specific profile in the market. But before you define your customer profile, you have to talk to a lot of customers and figure out what aspects of their business, if you're selling a B2B product, what aspects of their business need help in resolution? What problems do they have? What things do they want to solve? And from there, you'll get a better sense of what are sort of their key factors in making decisions for a product or a service solution. What are some of the business trends and issues that affect how their business is going to change over the years? What are their interests, beliefs, preferences, etc.? What are the decision factors that they use when buying a product? So knowing your customer really well, I think, is the most important thing that early stage companies can do when they're looking at the global marketplace. And that requires a lot of listening. It requires a lot of trial and error in the process of discussing, determining what needs and requirements there are, offering up solutions when they have a problem, and determining whether or not that solution is going to fit or not fit that particular problem. John, would you like to give some comments?
Let me check John. Yes, John is all online. No?
Oh, can everybody hear me? You still working?
Yes, we can.
Yes, we are. We can hear you.
Okay, so the goal is to understand more about your customer while you're building your product and then when you're going about selling. And understanding not only the problem, understanding the environment in which the customer has that problem, understanding the organization. There's a difference between somebody who, particularly in a large company or even a small company, there's often a difference between somebody who's the user, somebody who's the decision maker on buying the product, and then somebody else who has the budget. And so understanding, building a great product is key, but then understanding how it's going to be used, how you sell it, what that process looks like is really an important part of the process. Very often we have people say to us, well, how do I price my product? And the answer to that question is very often you have to understand how your customer views your product, the value that you're providing in terms of increased revenue or avoiding costs, and being able to couch that value not only in the price, but how you communicate that to your customer. And spending time with your customer so that you can talk the language that your customer does, use the terminology that your customer is used to using the approach and methodology that your customer may go about evaluating and valuing your product winds up being really, really important.
So, John, when you say value, communicating value, what do you mean by that in relation to a lot of entrepreneurs like to talk about features of the product
Right.
or the benefit of the product? But what does that mean when we talk about communicating value?
Okay. So communicating value, if you're asking a customer to buy your product, they're buying your product because it does something for them. They're giving you money and they're expecting something in return. And more typically than not, you need to be able to quantify that value. It saves them time, it saves them manpower, they make more money, they get more revenue from each of their customers. Those are important metrics because customers typically are looking at payback. If I buy something, how am I recouping the cost of that purchase? And so being thoughtful about the value in both economic terms as well as in both quantitative and qualitative terms becomes very important as you're going about selling your customer, who may be initially the user, but your user has to go to somebody who's the decision maker, and that decision maker needs to go to somebody who's got the budget. And so the question is, why should I spend the money? You've got a great product, but why should I spend the money? What's in it for me?
So this is an issue that we've seen with entrepreneurs all over the world. So the ability to communicate value and help the customer make a business case for the product or service that they're buying starts with knowing the entrepreneur and the startup team knowing their customer really, really well and understanding their business at a level, a sufficiently deep enough level so that they can help them make the business case sometimes for their bosses and the decision makers and those that are going to sign the purchase order. So knowing your customer is really, really important. The second that we find with entrepreneurs to make them more successful is they really need to focus on just one or two things and do those things really well. Entrepreneurs are natural problem solvers. They see a lot of opportunity in the market. They tend to get very excited when there's a new problem because they can see ways of solving it, whether with people, resources, products, services, etc. The challenge becomes really how do they do one thing and one thing really, really well so that they can build a significant enough customer base in a particular market segment. So if you're selling to B2B customers, those types of customer profiles need types or different types of communication, of service, of support, perhaps different ways of invoicing them, different ways that they pay, versus perhaps if you're selling B2C. So a consumer-based customer has probably lower expectations about the amount of interaction that they might have with your company. They might expect less service, perhaps, than a corporate customer. And so the amount of focus, time, and energy that's put towards servicing a particular customer profile is really important to be successful servicing that customer profile. One of the challenges we see are entrepreneurs who want to service every type of customer profile, and they can't do any of them really well. It's the old adage of, pick one thing and do it really well, and then you can be more successful in finding more customers that just look exactly like that first one, and you deliver higher value more efficiently to that particular customer if you understand their needs and requirements. So while entrepreneurs are natural problem solvers and see a lot of opportunity, they really do need to focus to be more successful. John, would you like to share your comments on focus?
Yes, and I think it's, the comparison I want to make is, if you are so lucky, you will have competition, and having competition is actually a good thing. But what happens is, particularly when you're competing against a large company really tries to do a lot of things, and the difference between a large company going after a product in a market and a startup is, a startup can move more quickly, and a startup is really focused on only doing a couple of things well and staying close to the customer. And you've got to realize that that's a really important and valuable advantage. And if you try and do everything, you'll be no better off than a large company, but you will lack all the people and money that a large company can throw at the same kind of problem. So recognize that your advantage is the ability to move quickly, to stay focused, and keep that in mind. And that focus means you're really going to do only a couple of things and do them very well, at least initially when you're starting your business.
Right. And I think that's important, at least initially when you're starting your business. We see a lot of entrepreneurs that they're strong sector and strong enough that they can branch out into another sector. So it's an initial thing. And sometimes actually it's being narrowly focused for the duration of the business and the market opportunity. But as John said, being narrow rather than broad is really important in the success of a business. The idea is to own that particular market sector. And so if you find a more narrow niche in the market where you can be successful, rather than competing in a very broad, open, large market opportunity, we generally recommend to entrepreneurs that they consider the narrow market as a way to start and grow success in their business, because it does give them a better understanding of the needs and requirements of that particular customer profile, helps them understand, develop, and execute their service and support offerings for that particular customer. And it just allows them to develop a more efficient, better functioning business as a whole. So narrow is usually better than broad, than we found. Again, if you think that everyone is your customer, then no one is your customer, and it becomes very hard to execute a marketing program, for example, that speaks to a particular target market, or it speaks to everyone in a large target market, but no one's necessarily responding because they don't see themselves in that particular profile or that particular message. John, what comments do you have on narrow versus broad before we turn over the next couple of slides to you?
Okay, so I think one of the challenges is, for when you're operating in a small market, what we typically see happen is you go to people you know, and that's a good thing. And and very often in a small local or regional market, your customers may cover a broad range of sizes and industries and geographies. And that's not a bad thing to do, but the question is, how do you scale the business? And particularly when people start looking at bigger market opportunities, the challenge becomes going after big companies, going after small companies, going after companies across a range of industries and geographies does not scale well. So, if you have a business that you're only going to be selling in a small city or geography, then you can be broad. That will work. But if you're looking to scale your business, then you have to think about, how do I sell? Because in a larger market opportunity, your next customer is typically going to look very similar to the customer you just sold and installed and is happy with your product. So that reference selling is the methodology that people typically use in large markets. And as a result of that, keeping yourself narrow so that your next customer looks similar enough to your prior customer is a good strategy, and it's a strategy that will enable you to scale your business in a repeatable, predictable manner, which is a very critical issue, particularly when you're looking to raise outside capital. Because when you're looking to raise outside capital, people want to know that you really understand, how long does it take to sell, who are you going to, how long is it going to take to get your next customer, what does your pipeline look like, what does your forecast look like. And so it becomes a useful tool not only for building revenue, but for being able to communicate with your potential investors as to what your business is going to look like over time. Anything else you want to add to that, Michelle?
No, go ahead and take over the next couple slides.
Okay, so next slide is working with the very best people. The challenge in any business is, how do you find the best people? How do you find the best people who are going to help you grow your company? And sometimes that's a challenge, because very often you're starting a business, you're passionate about it, you're willing to go without income for a while, and you know some good people, but how do you bring them aboard? How do you get them involved when you may not have enough money to pay them? And the answer is, number one, it's hard. Number two is, think about bringing aboard people on a part-time basis. Think about bringing aboard people on an advisory basis. Think about how you bring people and get them interested and as passionate and as committed to the business as you can. And that involves people who are part of your core team of developers and people involved in all aspects of your business. But it also means finding the best people you can to be advisors and mentors who can give you valuable feedback on your business, who can give you the tough love and advice that you need, who can help make the introductions to customers, to potential sources of financing. And so you need to look at not only your core team within the company, but your extended team, and bring them aboard and get them excited about what you're doing. Very often people say to me, well, how do I raise money from angel investors? And I say, you go to angel investors and you ask them for help and advice. And if you ask them for help and advice, hopefully they are knowledgeable about your business. They're going to give you help and advice, and ultimately, if they like what they see, they're going to offer to give you money. But in the interim, what they're doing is giving you something even more valuable than money. They're giving you their time and advice, and your job is to identify the right people and figure out how to bring them aboard. Michelle?
Other comment about the very best people is defining what is best is very subjective. I'm a big proponent of companies bringing on board, whether it be unpaid advisors or paid employees or what have you. I'm a big proponent of finding people that think differently than you do. So people that come from different countries, different educational backgrounds, different socioeconomic classes, different past lifestyles. If you grew up in the city and they grew up in the country, for example, all these different perspectives play into the building of a better product and a better company. And the research data shows just exactly that more diversity amongst the employee base and the management team builds better company, better products. I also think that, to Jon's point, that you get better quality feedback, advice, and tough love from people that have very different backgrounds. And also, all of us have our own personal networks of contacts, and some of our networks are very diverse, unique, and even eclectic. So bringing in people to your team, whether they be advisors, mentors, employees, contractors, or vendors, finding people that are different than you or have different backgrounds tends to open doors for a much more diverse set of introductions that you might be able to secure as well. So I would encourage you that hiring the very best can be what your needs are today or your needs 3 years from now, but also focusing on people from different backgrounds, different perspectives, because you'll build better products, better companies, and a stronger market presence for your customers.
Okay. Moving really, really fast. And, why is moving fast important? Moving fast is important because you never know who's right behind you. And it's one of the best practices that we see helps companies stay ahead of competition, stay innovative, and be responsive to what the customer needs are. And it's critical for getting customer traction. It's critical for getting investors. Investors are interested in seeing people who are responsive, who are moving quickly, who understand how to organize and run quickly, and that can relate to how quickly you build and iterate your product, to how quickly you respond to customer queries. So being thoughtful about how you organize, how quickly you can move, how thoughtful you are, and assuming that there are in a market that you're competing against, that there are other people who, if you aren't moving forward quickly enough, are going to be competing against you and potentially moving ahead of you. What we find is in almost every marketplace we've ever seen in any geography, there are typically 1, 2, 3, 5, 10 companies who are doing the same thing or something similar. And these days, customers, the good news about the internet is that people, potential customers, look and seek out the best product. That's the good news. The bad news is if you have a second-rate product, you're going to have a much tougher time getting market traction. Michelle?
I think the other thing I want to share about moving really fast is one of the challenges that we see regularly is building a startup is difficult and challenging, but even more so when you don't have complete information about the market, about timing of things. So you're forced as a CEO or as an entrepreneur to make decisions with incomplete information. And accepting that that is part of the reality of founding a company, moving into new markets really quickly, is the fact that you're never going to have all you want, or it's never going to be 100% complete. I think it helps with the decision-making process for founders to say, okay, we've got the best quality information we can get at this particular moment in time. We have to make a decision and pull the trigger here because we have the competition just around the corner. So the acceptance of incomplete information or lack of full information, I think, is a factor that CEOs have to understand so that they can continue to move fast in their market.
Okay, good. We asked you 5 things. We're giving you a bonus of the 6th one, which is to look at closely for patterns. The entrepreneurs and businesses that we see are most successful are the ones who spend enough time with customers, spend enough time listening, and in doing so, look for patterns in terms of what kind of customers buy the product, what kind of additional needs your customer may be, you can build product for. We've met companies who have targeted their service or product after a particular market, and then later discovered that a whole different group of customers have found them. And, that's important information. Sometimes we are really smart and we target the right market. We identify who the right customer is. We identify the correct need. And you know what? Sometimes we don't. And looking for those patterns as to who buys, why they buy, why people say no. And by the way, when you're selling, you're going to find a lot of people who say no, and understanding why they say no, understanding what commonality, what pattern exists becomes very, very important, because based on that, you can look at and say, so what do we need to change, if anything? Do we need to change who our target market is? Do we need to change how we price? Do we need to change our business model? Do we need to rethink our product? Do we need to rethink how we distribute our product? And those are things that typically for a company, once you build your product, your initial product, it's somewhere between 6 and 18 months where you are going out, you're experimenting, you're trying different things, you're looking for patterns, and based on that information, you're saying, or should be asking the question, so what do I need to be doing more of? What do I need to be doing differently? What do I need to be doing less of? Michelle?
Yeah, and I think that to John's point about what do I do more or what do I do less of, that to get those answers, sometimes the only way you can understand what you're doing well or not is by having data available with respect to your sales pipeline. So tracking how many contacts that you're making and what is the response from those contacts. At some point in time, you're going to have data that says we've just made 100 contacts and there's only 12 companies right now that are even remotely interested in speaking to us. Okay, so if we make 100 contacts, 12 of them indicate an interest, then we start talking to those 12, and out of those 12, 5 have extended interest and want to continue the conversation further and more in depth, that gives us a sense of the scope and size of the marketing and sales effort that we need to put forth to close however many customers we need to hit our targets, whatever our targets may be. They may be a revenue target, they may be just securing our first pilot customer target, they may be securing 10 customers in a particular geography within a year's period of time. So the ability to recognize patterns, especially from the sales perspective, it hinges upon collecting and tracking good data for our customers in the sales process. And so I would encourage you on the pattern recognition side, at least from the sales perspective, is always track all your contacts, all your activity. Use the free CRM tools that are available online. You know, there's lots of technology out there that's available for free. So use those to track as much as you can from a data perspective so that you can identify these patterns more readily and more easily.
Right. And that will help you not only as you go about building your business, but it's also a valuable tool as you communicate with partners, with investors, with others who you are trying to describe how your business works. And building that basis of knowledge and understanding and insight will ultimately make you more successful in all aspects of your business. Michelle, do you want to?
Yeah, so John and I just wrote a book that launched in April. We wanted to bring it to your attention. It's called Decoding Silicon Valley, The Insider's Guide, and it's available on Amazon. And the book is written by two entrepreneurs, John and I, and it's written for entrepreneurs, so it's written for you. And what we've done is we've encapsulated a lot of the best business practices from Silicon Valley into the book to help people understand the things that we do here that help us build large successful tech companies. So we focus on a lot of the aspects of product market fit, understanding your market, how you can be more effective in the networking process, because so many of our contacts come through random interactions or random meetings or networking at an event. And then how you can, bring on board the right kinds of people that can help your company add value to what you're doing in the marketplace. So I would encourage you, to take a look at the profile of the book on Amazon. We've interviewed more than 24 people in the book, so venture capitalists, successful entrepreneurs, that thing. So I think right now what we should do then is open it up to, yes.
So before that, so let me ask a question. So, it's called Decoding Silicon Valley, and if I've got a business and I'm not planning to raise money in Silicon Valley or sell to customers in Silicon Valley, why should I bother reading the book?
Well, I think the reason for reading the book is really to understand the best practices that happen here that can be applied to any business anywhere around the world. While it's called Decoding Silicon Valley, the content is not totally focused on Silicon Valley. It's really focused on helping entrepreneurs be successful, building their businesses, regardless of where their location is.
Okay. Good answer.
So let's address some of the questions here. I think one of our first questions is, how do we relieve a dormant partner that is not adding value to the business? So this may be I would assume it's a business partner or a founder of the company that is no longer participating in the business. I'm not sure exactly if that's the question. John, what guidance and advice would you give a founder if they have a co-founder who perhaps today is just not participating actively in the business and is not adding value to the company?
Okay, so let me tell you what you shouldn't do is ignore the problem and hope it just goes away by itself, because it won't. And all too often, we see where people are afraid to
Hello, Michelle. I think we lost John.
Yeah.
We'll be online a couple of minutes later. So there are many questions now coming.
I can see there are a lot of questions. Well, we'll hope that he comes back online here in a minute. Let's see. When are some of the questions? So, Burak, when do we get started with registration for Startup Istanbul?
I will answer separately for that question, so don't bother about that.
Let's see. What are the values out of your scope? Because what if the values are out of your scope because no one knows the added values so easily? Not sure, Khaled. I'm not sure exactly what that question means. If you can clarify in the meantime, I'll get to another question. Let's see. Okay, so Hassan has a question. Or I guess the question is, why is a competitor good for an entrepreneur working on the same product? So my perspective on that is, if you have competition in the marketplace that's doing essentially the same thing that you're doing, it helps you become better at differentiating your product or service in the market. The fact that you're competing for a customer with another competitor will help you do a better job in fashioning your product or service offering, and also becoming better at articulating your message to the customer as well.
Can anybody hear me?
Yes, we
Hello?
can hear you.
Okay, so can I go back and answer the prior question
Yes,
about getting
please.
rid of somebody? And the answer is, you can't ignore the problem. If you have a partner as a co-founder or as an employee, or even a channel partner, somebody who's helping you sell the product, support your product in the marketplace, if it's not working, you can't ignore the problem. You got to sit down and talk with them about the problem. And it's got to be a professional, non-confrontational, non-emotional discussion about, look, this isn't working. And it's not personal about you're a bad person. It's simply you need to just approach it in a professional way of, this isn't working, and we either fix it. Well, there are many ways to fix it, and you've got to go in listening, but then making a decision as to what are you going to do about it. And as I said earlier, all too often people people who are not performing, who are not doing, not contributing, they know that. In almost every case, they know that. And so they're sort of waiting for you to have that conversation with them. So don't ignore it and address it head on. It will drag you down otherwise.
Thanks, John.
Michelle,
another question. Yeah, another question we have is from Patrick. He said, so at the beginning, Michelle, you said it's better to aim to a narrow market. So at the beginning, is it best to try more markets to find the best product market fit than focus on a narrow market? So Patrick, the answer is, you do have to look at a couple markets initially to figure out where you're going to gain the most receptivity from your customers, and where they're going to be most apt to purchase the product. So yes, in the very beginning, you do have to try a couple of markets, unless it's very, very clear what your market is. If you do try a couple different market opportunities, then you'll find where the best product market fit is and can focus on a more narrow market.
So there's a question
John,
about...
you go ahead, John.
So there are a couple of questions around sort of best tools for analyzing data. How do you evaluate, find patterns? The problem, the answer is, it depends on your business. All too often I find people think that getting lots of data is the answer, and sometimes that is. But more often than not, it's figuring out what the important data is. what are the important metrics that are relevant to your business? Michelle and I have worked with several entrepreneurs, and they track, 20 or 30 different metrics every month in their business. And we encourage them to track less. Figure out which ones are really important. And the same thing goes for data. You've got to be thoughtful about, so what's going to tell you what's important? What's going to make the difference? What kind of patterns are you looking for? It's usually about figuring out less rather than more. And so I can't give you specific guidance because every business is going to be different. But frankly, that's why you need to surround yourself with experienced people. Experienced people who are on your team, experienced people who come in to advise and mentor you, because hopefully those people will help you as an outsider look at and say, you've got 10 customers are telling you the exact same thing. What else do you need to know? It's that kind of analysis that frankly comes more from experience, and it comes hopefully also from surrounding yourself with people who can help give you that perspective. Michelle, you want to take another question?
Yeah, so there's a question from Alex Osunga. What is the best way to evaluate the market for a fresh idea before venturing into that actual business? The best way, in my opinion, to evaluate the market is to look at primary and secondary information. So your primary information is the information you're going to gather through talking to actual companies or customers in that particular geography about whether or not they have a particular problem in their business, and if they would be interested in purchasing a particular product or service for a specific price. So that whole primary research is extremely valuable in determining product market fit and validation and things like that. So that's a little bit, those are steps that you do slightly later after you've determined whether or not there might be a need in the market. The other thing is secondary information. That comes from sources such as research, market reports, data and statistics that are put out by the government or industry associations. So the two things really are primary and secondary information can help you make a better decision about whether or not that market is a valid market for you or not. John, over to you for the next question.
Yeah, so there's a question about somebody who has a mentor who is a competitor. They're not a mentor. Get rid of them. It's a simple answer. Mentors need to be unbiased. They need to be helpful. And if somebody they can't be give you unbiased advice and feedback, and that's a bad situation, and ultimately it'll only get worse.
And to that point, there's a question from Hassan. It says, what should I do if a key person in my startup team is also engaged with his own startup? Please suggest the best possible solution. I think that startups need a lot of time, energy, and attention, and to be really successful, you have to be really focused. And if you have someone on your team who is not 100% dedicated and focused on your company because they also have their own company, I think you need to have a very straightforward discussion how things are going to move forward in the future. And if the fact that they have their own startup as well, in addition to working on yours, causes a conflict, or there's not enough time or on their schedule to help you do what you need to do, then I think you have to put a long-term plan in place for finding an alternate person or resource to take over that person's job. So I think that it's very hard for entrepreneurs to be successful when they have only part attention or part time from key people on their team. And I think they need to look for solutions to resolve those things very, very quickly.
Okay, so Jitesh asked a question, how do you market your product for international markets when you have less idea about consumer behavior overseas? You know, the answer is you need to get that information and insight, and that typically comes from hiring somebody as part of your team who can give you that advice. You know, we always encourage people to start building their business locally. You know, we have met companies which, you know, try and go into their first market is a different geography than where they are based or where they are from, and that usually doesn't work. So even if you say, well, you know, I'm an entrepreneur in Turkey and my big market is in the EU, you know, start building your business in Turkey. Learn what works, learn what doesn't work, and then make sure you have the right advice and team members, and you have spent enough time to understand the market in your next geography. But leaping into a geography before you've been able to test and validate in a market you are familiar with is less likely to be successful. Michelle?
Yeah, so we have another question. The question is from Sai Reddy. You're asking us to do one or two things really well, but do you think it's really sufficient to compete with the big shots in the market? Because they will be having a large scope in copying us and can take us over easily. So the issue really is about how does a small company compete with a large company in a market? And I think that the way that a small company can be successful is by understanding what the customer's needs and requirements are. So building a strong relationship with the customer and spending time with them to understand what their needs and requirements are is the first thing. So being a good listener and then being a good solution provider. The other thing is being very closely connected to your customer at all times allows you to respond and react to issues and challenges that they're having and provide solutions to them that perhaps are going to come much more quickly than a large company could ever provide to them. So I think that competition by a small company against large companies is a very common thing that we see around the world, but we see a lot of small companies very successfully doing it because they're fast, they're nimble, they're responsive, they listen well, and the customer feels like they get better, tender, loving care, so to speak. They get better support from a smaller company rather than a larger company. So there's a lot of distinct advantages to being a small company in the market.
So there's a question about funding from angel investors, and is the idea and prototype enough to seal a deal? You know, every investor is different, and it varies by marketplace. Today in Silicon Valley, venture investors will typically not invest until there is product built, there's customers and revenue. And angel investors would like to have all those things, but depending upon the opportunity, depending upon how much money, they will sometimes invest when there is less. I think there is no specific. The piece that I think is important to realize is that investors, whether they are venture investors or angel investors, are investing in the people. They're investing in the idea, but they are also to minimize the risk. And so as you think about presenting your business, you want to present not that this is a high-risk investment, but the ways in which you are lowering the risk because you've spent enough time with customers, you've gotten the right team with the right experience. All of those things go to lowering the risk. The other thing is, while people are intrigued by you as an entrepreneur, maybe intrigued by your technology or product, ultimately they're asking the question, can I make money? And so you've got to be able to present not only yourself and people to like you and like what you're doing, but they also have to believe that when you are successful, or that you can be successful, and that they're going to be able to make money. And there's a lot more involved in fundraising, but hopefully those are some useful basics.
So I want to take a question from Kehinde Afolayan. He says, is it advisable to pay a fee to register with an incubator or accelerator for a startup in its ideation stage? And I think that you would have to assess the value. If you are interested in joining an accelerator, an incubator, you have to assess the value that they're going to provide for you during the ideation phase. There's, if it's just desk space, so you're renting a desk and you have access to their network, for example, that's one thing. If they're actually providing very specific training, guidance, etc., to help you move from ideation to actual product stage, then that's another thing. You have to assess the value of the services that you're going to get from an incubator or accelerator. I think there's a lot of advantages to being part of an accelerator, being part of their network, their community, having access to people you might not have access to normally. But on the other hand, you have to really figure out what the core business objectives that you have for your company. If you want to take your product from ideation, if you want to go from ideation to product within a very set period of time, can they get you through that process quickly, efficiently, and within your time schedules? And what are they going to do to help you go from idea to product? How are they going to help you in the market validation process? How are they going to help you in the interviews that you might need to have with customers and prospects and that sort of thing? So there's no set answer, Kehinde. It's just a question of what's the exchange of value for that fee. So what are you going to get in return for paying that fee? John, you want to take one more question, and then I think
as I asked the question about what's best way to hire somebody who can be a co-founder and act as CTO for a tech startup. When you're looking to bring co-founders aboard, when you're looking to bring investors aboard, you need to think about this not as a hiring decision. You need to think about it as dating and possibly getting married. So you need to get to understand who the people are. You need to understand what their values are. You need to get to understand how they are going to behave when things are going well and when things are not going well. And so spending time networking to find people, whether it's a co-founder, an investor, doing reference checks, formal and informal, and then spending enough time with people in different situations and learning how they think, how they behave, what their experience is, what perspective they can give you, will all help you make a better decision as to whether you really want to get married to that co-founder. Not in a literal sense, but in a figurative sense. Whether you want to take money from that investor, because those are long-term decisions, and you want to make sure they're going to be the right decision for your company.
So, Burak, let's do a time check here. We're past our wrap-up time, but I just wanted to check and see how many, where we stand.
Michelle and John, thank you very much. We could get a couple of questions more. I think there are lots of.
Okay, sure.
If your agenda is available, we can get a couple of more questions.
Okay.
So there's a question here on how much equity do you have to give to a angel investor, and the answer is as little as you can get away with. In a typical venture capital financing, investors take somewhere between 20 and 40% of the equity in a company. For an angel investment, It's typically less, but it very much depends on the specifics of the company, how much money you're raising, and the stage of the company. We have seen companies where before the company goes out and raises a traditional Series A venture capital round of financing, that the founders own 20% or less of the company, and the other investors, angels and otherwise, own a majority of the company. That is not a good situation for anybody. And actually, that's a situation that would make it very difficult to raise professional venture capital financing. And why is that? Because there's not enough incentive for the people who are actually doing the work.
So,
You know,
so John, there's another question that sort of ties into that from Faith that says, I'm building a new online startup which my boss supports and wants to be a partner. What are the partnerships terms that should be in place? Can you comment on that as well?
so I'm not entirely sure what it means. I mean, if your boss wants to, his company wants to be a partner, then you have to look at it and say, what is that company going to contribute? And then you have to try and value that contribution. If it's a distribution agreement, then usually it's a share of revenue. If it's a equity investment, then that's an equity investment. If it's services that are being provided, then sometimes that gets valued as some equity ownership in the company. If your boss is individually trying to participate, that's a different kind of situation. So I think the specifics matter a lot, but in any case, you always have to look at it and say, what are they going to do? How do we value that? And make sure that if they're getting value, if they're receiving something, that they're delivering value. So if I have a deal with a company and they're not performing, I need to make sure I have not only a way of compensating them if they do contribute, but if they're not, if there's a distribution agreement and they are not selling the product, then I need to find a way to make sure they don't get compensated. I need to make sure there's a way to unwind that situation. Because the last thing you want are partnerships and relationships and things where those partners are not contributing. And it goes back to my earlier point. When things aren't working, you have to address them.
So Jamil had a question. Jamil Ahmed had a question. He developed products for the UAE market that tested well, but unfortunately, because of war and what have you in the area, the economy's gone down. So what's the best option? I think there's two options here. The first option is to figure out, are there other markets where that product would be well received, that you can sell in, that are less dangerous, for example, than selling into or through geographies that are involved in war. So the first question is, can you sell into other markets? If there are no other markets that where the product is going to be successful, then the question becomes, if we're going to sell into that market, then how do we protect our interests? So it comes down to security issues. So how do we protect our people, our product, our intellectual property? How do we get our money in and out of the country? What are the currency issues? What are the banking things that are being challenged? But in war-torn economies, there's just a lot of times not a lot of buying that goes on, because there's other basic human needs that have to be addressed, like safety and security, food, shelter, etc. So I would say do an analysis or an assessment of, number one, are there other markets where this product will sell? If there are, go pursue those and investigate those. If there are not, then the question becomes, Can we continue selling into that market? And how can we protect ourselves and get our money in and out of the country?
So I've got one question. I don't know how many we want to take, but Risky asks, about generating revenue um, um, and versus giving away a free service. There are some businesses that you should never give the product away for free, because once you give it away for free, it's hard to get people to pay for it. There are other businesses where the model is based on getting a large user base that you may monetize in a different way. So the question is, what kind of business are you in? The other point is that very often when you are a new company and you're trying to get your first or second customer, you need what we call a reference customer. And so when it comes to a reference customer, it is not unusual to offer your reference customer a deal. Now, that does not mean you give the product away for free. It means that you are doing a trade. You are giving the customer a far better price on the product, which may be ultimately free, but for that, you are in return getting something. You're getting feedback from the customer, you're getting user data, you're getting before and after metrics about how the product is working or how much money they're saving or how they're using the product. You're getting a willingness for that first customer to be a reference for future customers and potential investors. So, just giving away a product because nobody is willing to pay for it is not a good idea. Giving your first couple of customers a better deal is something that's is typical for a lot of companies.
So I'll do one more question and then we'll do a time check with Burak. There's a question from Chakwuma Madi says, how can a startup founder handle and overcome challenge brand? My best recommendation on this would be to talk to your customers about their perception of your brand, your product. Ask them, maybe invite them to your office for a lunch or a coffee, and ask them to talk to you about how they feel about your product, what their experience has been working with it, and what they think about the brand identity of the product, for example. Ask them about the competition. What do they know about the competition? So the answer about overcoming challenges with your brand goes back to talking to your customers about their feelings, their preferences, their beliefs about your brand. I think you'll find some of the answers when you discuss it with them. Burak, should we do a quick time check and say,
Yes,
determine if we want to take
Michelle
more?
and John, it was a great webinar. I also get lots of knowledge in this presentation. Thank you very much. If you have also mentioned your emails, probably the entrepreneurs who attended this conference will be asking if they have more questions to you, and
Yes.
we will also put the recording of this webinar on our YouTube page, and also additionally, if you allow us to share your presentation, we will put it on the slide share. And it was a great to see you again on the webinar. Thank you very much.
All right.
Yeah, it's our
Thank you.
pleasure. If there are other topics that would be of interest, I would encourage the entrepreneurs to circle back with Burak with their feedback, because John and I are happy to do other webinars in the future with topics that may relate. We get a lot, it seems like, about founders, the founder working relationship, investment, so we can do that topic as well. But to answer the question about whether or not they can reach out to us directly, via email, the answer is yes. We're happy to take your comments and your feedback and answer your questions. And I think the last thing was, Burak, the registration date for Startup Istanbul. Can you tell us approximately when that might open?
I mean, the registrations for the startups, we are still, by the way, interviewing with the startups. We have a team, Jem and Pauline, is interviewing with all the applicants of the Startup Istanbul Challenge. So it is still a kind of in the process. We are now also looking for the short list of the startups who applied. So it will be going to finish at the end of August. So the deadline is August. But of course, we will look to get all the entrepreneurs to Startup Istanbul this year. Hopefully different kinds of geographies. As today's, we had many entrepreneurs from Africa, Nigeria, Pakistan, Kenya, Turkey, and also other countries. So we will hope them to come to Istanbul as well at the beginning of October this year. It will be on 6th and 10th of October. This is basically the information that I can give at the end of the presentation, but I am also available on my email for details, questions, and technical questions of the people who would like to attend attending to the conference.
Great. Well,
Great.
we thank you very much to everyone who participated today. It's such a pleasure, and we'll be happy to help out if there's any more information that you need or want. You can email John and I. We're happy to support you guys.
All right. Thank
Michelle,
you all.
John, thank you very much
everyone.
again. Bye-bye.
Thank you so much,
Bye-bye.
everyone.
Bye-bye. Bye-bye.
Bye. Bye.
Hope to see you in Istanbul. Good evening from Istanbul. Thank you for all.